I made $81 on IBM using a strategy that most people have never even heard of. It's called a broken wing butterfly. It sounds complicated, but once you see the setup, it's just a spread with a twist. I'm going to break down what a broken wing butterfly actually is, why I chose it over a regular spread, how I picked my strikes, and walk you through the full trade from entry to exit.
This strategy is probably the closest that I will ever get to gambling in terms of options trading. But not really, because the odds would still be in my favor. It is now earnings season where companies report how their performance has been to shareholders every single quarter. And we're currently in Q3. The trade I'm going to do is a near expiration broken wing butterfly. IBM reports earnings today after market close, and I want to get a piece of that. So first, since this is quote unquote gambling, I'm going to go for the closest expiration that I can find, which in this case would be the 2-day contract. Second, I'm going to decide what direction I'm going for, and you could have any sort of conviction for any reason, but for me, I'm going to be neutral to bearish. Therefore, I will stick to a put broken wing butterfly. A broken wing butterfly in a nutshell consists of two strategies at the same time. This would be a put credit spread along with a put debit spread, where the credit spread has at least 2x the wing width of the debit spread. And the reason why we vary those widths is so we can still receive a credit upon trade entry. So in the case where we don't get the move that we want, we would still come out with a small profit. Third, I'm going to define my risk. I decided that I want to risk about $500 at most. So the expected move to the downside, as shown here by this brown bar, points to 197.5. So I'm going to sell 2 puts here. And I'm now going to buy the $5 wide put debit spread. So the short strike that we picked is a 197.5. So we add 5 to that, 202.5. So I'm going to buy one of these. This naturally points to 2, but I'm going to bring it down to 1. And conversely, for the credit spread, I'm going to go for at least 2x the wing width. So we had a 5 wing width for the put debit spread. I want to go for at least 10. So I'm going to buy one of the 187.5 put credit spread. So again, for a broken wing butterfly, we want to go for at least 2x the wing width of the put debit spread. So we have a $5 wide put debit spread. So we want to go for at least $10 for the put credit spread. So I'm going to start off at the 187.5 strike. So before the parameters of this change, I'm just going to place the trade really quickly and then explain afterwards. I'm not getting filled, so I'm actually going to adjust my strikes a bit. So I'll sell 2 of the 195 short strike. I'm going to buy the 200. I'm going to buy one of these. And 185. Here, if I place this trade right now, I will be paying a debit of 2, but that's not what I want. I want to get a credit. I want to receive a credit. So I'm going to adjust the strikes a little bit. I know I originally decided on risking $500 at most, but I don't mind going up to about $750. So I'm going to go for this. Clearly these are pretty hard to fill, so I'm going to get filled first before I explain. Finally. So we opened the near expiration put broken wing butterfly. We got filled at a 9-cent credit. So let's look at the analysis tab. Okay, I already have one here. So, like I said, IBM reports earnings after market close today. So as you can see here, with the parameters that we set, if it goes up or stays exactly the same, then I will receive, as you can see here at the P&L EXP label, $9. I will receive $9, which I know is not a lot. But the whole purpose of us placing this trade is to go for this gamble, right? We are trying to predict direction here. So if we're at the near top, if we hit $195 exactly after earnings, which is where our short strikes were placed, we can receive a potential profit of $494. right? So if it stays the same or it goes up, I will receive 9. If it goes down, but not too much, we could potentially receive, oh sorry, not 494, 509, 509. We could potentially receive a max profit of 509. But if it goes down too much, then our max loss would be 741. Yeah, we have, the odds are really in our favor here, right? Because two directions are completely eliminated, right? We are set, we have insurance. So this is a very high probability trade in the sense that we have two directions that are completely in our favor. If it stays the same, neutral, or if it goes up, bullish, then we will receive a $9 profit at expiration. So the only way where this trade could go bad would be if it goes down, but if it goes down too much. So we based our short strikes off of the expected move. So this is where the market already expects IBM to go towards after earnings, by the time these 2 days pass. So if it goes down just the right amount, we could receive a potential max profit of $509. And the only way this trade could go bad would be if it goes down, but if it goes down too much, past the expected move. So the max potential loss that we can receive here is $741. And the gambling aspect here that I mentioned earlier is that we are trying to predict direction. But again, this is still highly in our favor. IBM reports earnings after market hours today, and I'm just going to report back tomorrow. It's the next day, July 23rd, and it seems like IBM has missed earnings. It didn't go exactly within the 195-200 range, but we still are up $85, which is way better than what we originally expected to just get 9 cents. So our gamble paid off. So I'm going to take profit really quickly. Close this position. Okay, cents. So we profit $81. So it would be the 72 credit on top of the 9 cents it would be the 72 cent credit on top of the 9 cent credit we initially received for placing this trade. So yeah, so I would say that this trade was a success. We risked about $800 in buying power and we came out with about 81, so about 10% ROI over 1 day. I think that's a pretty good return.
And that's the full trade. One broken wing butterfly in IBM with $81 in profit, and my risk was defined the entire time. This is one of those strategies that often gets overlooked because the name sounds so intimidating. But once you understand the structure, it's just another tool you can pull out when the setup is right, especially during earnings. If you want to keep learning real strategies with real numbers from trades that I actually took, subscribe. I'm breaking down every single one so you can see exactly how it plays out in practice.